folks. So, welcome to another test broadcast for the London Open Trade. Now, if you look at our charts, what do we have for the year? We basically have a double top in the daily charts. We sort of triggered that double top with yesterday's attempt, but we don't have a clear candle that says, yeah, this is a bear market. What we have from yesterday is I would say that you've got a doji, not a perfect doji, sort of a doji, more of a spinning top. Okay, let's just say it's a doji. Okay, a spinning top would have given us a bit more body, but we don't have the kind of body size. In any case, what does the doji tell us? Dojis tell us that you've lost momentum. So, looking at the charts in the morning, I was thinking this is not going to trigger a follow through sell off. If you look at indicators, you actually have a bear cross on MACD, you've got your stochastic pushing oversold already. Um, Typically, when you find yourself in a situation where stochastics are pushing oversold and you have a break of a support, normally your assumption would be to think of a follow through sell off, to think of perhaps a bear market developing. Now, because we're talking about London Open, typically the strategy for me would be to just do a straddle. What's a straddle? Basically, you put a buy stop, sell stop with the nearest intraday support and resistance levels. Now, we've done that earlier, and our sell stop was actually triggered. We now find ourselves with a sell stop at 107.858. And what are we thinking here? Well, sell stop has been triggered. If you look at the chart, we did push the lows a little bit more. We're now pushing back inside the earlier consolidation. Do I think that there is potential for a real sell-off to happen? Well, let me go back to the dailies. If I go to the dailies, we have that double top. We find ourselves having tested the breakout point. We did not exactly close below the breakout point. What else do we know from the dailies? We haven't really reached any of the Fibonacci retracement levels. So that to me sounds like, okay, there's still some downside here. Okay, what else do we need to know as far as the daily charts are concerned? I'm looking at our ATRs and I'm seeing a figure of 87 of 00875. So basically that means your 21 I'm by the way, I'm using a 21 day sampling period. So that means that on average the last 21 trading days, the range of euro is about 87.5. For today, what do we have? Highs at 108.08, lows at 107.76. So that should be about 34 pips so far for the day, which means that there is room to maneuver. Do I have reason to think of a sharp sell-off happening? Let me check the calendar. And looks like we don't have any high impact data coming out today. So without high impact data, I would rely on the charts and I would just rely on statistics. Statistics that tells me, as we said, average daily range is about 87. So what's the plan then? We've already had our short triggered. we always want to have a stop. Okay. Now I don't know, for some reason, the platform keeps giving me a trail stop. So let me just change that. Let me modify that trailing stop into an actual trail stop. Where should my stop be? Remember that our strategy is a straddle, looking for a breakout of a consolidation. So ideally, your stop loss for one side would be the entry point of the other. And the entry point of our buy stop is at 108.097. So let me put our trail stop at 108.097. TP. Well, because we're using a single phase challenge, there's a lot of rules that such pop challenges come with. And one of those rules is you have what they call a consistency parameter. I think okay, I'm not going to talk about who the prop firm is, but I think the consistency parameter that I'm dealing with here is about 20%. So ideally, I would have wanted to place my TP from the high. We get okay. The way I do this is, you look at your chart. Look at where your next key support is at about 107.27. Given the average daily range of 87, then that's a bit beyond your average daily ranges. What you want to do is you put your TP, in this case because we don't have any catalyst, our calendar's blank, I would prefer erring in caution. If the average trading range is about 87.5 pips, then I would ideally want that TP for my short well within that ATR. Just simple bell curve. So where do we put it? The high is at 108.08. So 108.08 less 87 gives you somewhere around 107.30. 107.30. Put in again. As we said, we don't want to put an exact figure. We don't want to put the number exactly at the average daily range. So let's put our TP for this at 107.40. Ideally, I'd want to put it at 107.40. Now again, because of that consistency rule, we want to stay within the parameters of that consistency rule. If the consistency rule says that I should not have, because the target profit of the challenge is about $5,000, and our consistency rule says that is set at 20%. That means that we do not want to see profits of more than 20%. Because if you do, then there's a very good chance that the prop firm will basically just ignore or remove that any winning trade that exceeds that 20% consistency rule. So we set our target profit at about 107.54, well within the average daily ranges, and also well inside at 107.54. That should amount to about $942. So again, well within the average daily ranges and inside that consistency rule. Okay, what happens if this thing does not continue to drop? Well, as we said, we have our stop loss. We placed it at 108.097, and again, because the London open trade depends on breakouts on the consolidation, we placed a buy stop at that 108.097 stop loss price. So we have a pending order, a buy stop at 108.097. Again, we want to work within that consistency rule thing, and consistency rule thing tells us that you don't want to have a TP of more than $1,000. So we placed our TP at about 108.427. So if this thing does not continue to drop and decides to push up, then I'll find myself with a buy at the 108.097 region, hoping for prices to push to 108.427. If you look at the charts, we have yesterday's high at right around, let me see the number. We have the high at about 108.59 yesterday, so yeah, that we are well, our TP is well below that. Okay folks, so things that I want to emphasize. We must trust statistics. What do I mean by this? If you're trading, you see that you're profiting, don't be in too much of a hurry to get out of the market. If things are moving in your direction, then just rely on the idea that prices will get near that average daily range. Okay. From what I've seen, typically if you have an entry, if you have a trade opened around the open of London, I would say 20% of the time, if a real price swing happens, that move will end up near the average daily range around the time London market closes. So that's something that I also want to see. Of course, I have another rule, especially if you're not trading a prop account, if you're trading your own money. One rule that I have is to say that, okay, you have to satisfy the greed. What do I mean by this? Satisfy the greed says that, okay, you don't, much as we want to try to maximize things, if you're making a bit of money already, you're halfway to your profit target, then you might want to just get out at that point because of that satisfy the greed philosophy. What happens, because typically if you do that, if you do a take profit, that lessens the anxiety that you have about whether your target will be hit or not. And just in case something unexpected happens, at least you booked something. By the time that you do satisfy your greed, you do take out half your trade, another suggestion would be for you to adjust your stop loss, put it at the break-even level. So at this point, we don't really see anything happening. We're not waiting for any data to move this market. Honestly, I tend to think that we might just get a whipsaw for now. I'm hoping that that whipsaw will not get anywhere near my buy stop, but that's typically a big risk in situations where you don't have a catalyst to just drive things. So for now, folks, this is just a test broadcast and I'll be signing off. I'm actually just testing if this lapel's working, and I'll see you in the next test. Bye for now.